Hi guys, it's Any, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Today is Monday the 27th of May 2019. I'm just going to give you a technical analysis breakdown of some UK and US stocks. Let's get straight into the video. Remember to hit that like button, that subscribe button, and that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list. If you join my mailing list, you get priority access to my training course that I'm making for free for all my mailing list subscribers. You also get a breakdown of my stops, my entries, my exits, profit made, and the reason behind some of my trades. And you also get weekly videos straight into your inbox. Alright, so let's get straight into it. I got 3 UK stocks and 2 US stocks to cover. First one I'm going into is, let's put this in alphabetical order. That's not on my list. I need to put this on my list. DCC. So let's get to daily. So if you look at the daily chart straight away, you can see what I'm looking at here. DCC hit this resistance line for the 3rd time, and now it's selling off. The 188 simple moving average is kind of flat, but it's falling. So I think it's still selling off, kind of in the same vein as the descending channel pattern. What I can see here is that it looks like it's a good position to be shorted. It would have been great to get it when it was at the resistance line, but I only just recognize this now. But last time it was here, it went back all the way down to about 1,000 pips in 21 days. So this one, you could short it to be even more cautious. You could probably just short it to this line, because this line is a middle support resistance. Actually, I'll configure this and just make it dotted. But yeah, so as it stands, could short this to this line here. That's about 400 pips, and you can risk about 200, so that's 2 to 1. So the risk to reward ratio is pretty good. On the 4-hour chart, it's doing what I want it to do, which is it's broken out of the 15-day exponential moving average, consolidated below it, and now it's carrying on selling off. So I can see it going all the way down to this line, as I said before. When it's coming up to the line, it took 7 days to go 700 pips, so we don't know how long it's going to take to go there. You have to be cautious with this, that you might expect some turbulence, because here it sold off and then it came back up for a bit before selling off again. So you might expect a retracement at some point. Do expect that, because it's been selling off for 3 days, so it might retrace for a little bit before selling off some more. But I do believe it's going to sell off to at least this line. So that's what I'm looking at right now. Let me add this to my watch list actually. The next one is DAX. So yeah, DAX has been my DAX lines. The lines that I put on DAX are kind of crazy because there's so much going on right now. But I think it'll be a good position to potentially go long in. So I'll explain to you why in a minute. If you go to the daily chart, you can see there's been a lot of patterns that DAX has had. That's why there's so many lines. I've got so many lines plotted on DAX, but you can see this ascending channel pattern. It broke out of this, and now it's consolidating down. The daily chart doesn't really tell us much, because there's so much turbulence in the recent periods that there's no real pattern to identify, but it's still kind of staying true to this ascending channel pattern, because it's kind of double bottomed and then climbed again. On the 4-hour chart, this is where it gets interesting. On the 4-hour chart, it's kind of created like a descending channel pattern here. So it's peaked, troughed, and now it's coming back up here. Now, what I'd like to see before any action is to be taken, I want to see it either break out to the upside, which I think it will do, or sell off again. If it starts selling off, then I could short it back down to at least this line, if it's staying true to this descending channel pattern. If it's got another short to go, then I can short it down to this line. If it breaks out and then consolidates above this, then I can go long and hold it for a couple of days to at least this point. This point here, so wherever this point is. Let me draw it for you. So to at least this point. So something like that. So so as I said, it really depends on what happens here now. If it breaks out, if it kind of sells off. So I'm just waiting for something to happen, and then I can take a position on DAX, and that'll be some decent money to be made, because if I caught it from here to here, that's 3 days, 200 pips, not bad. But with DAX you have to have a strong stomach, because there's a lot of turbulence. It's not going to go up smoothly. It might retrace, come up, retrace, but it'll still, the full motion is still going upwards. Yeah, just have to wait. As I said, wait and see. I'm going to set an alert. What I'm going to do is that I'm going to put an alert. I'm going to put an alert on this line here, so that if it breaks out of it, then it will alert me, and then I can take action. Next one is ASOS. ASOS. Remember ASOS? So ASOS. This was, I think, one of my first pick of the weeks when I first started doing this channel in around January. I was talking about ASOS because I said on the daily chart, I said, okay, it sold off here because of bad earnings, but I knew I said it's gonna make its way back to 4,000 at some point, and that's exactly what it did. It took a while, had a little channel pattern here, and then it eventually broke out. Now the 180-day simple moving average is curving downwards on ASOS, which is not good, which means that price is still kind of falling. It's regained what it lost over December, but the long-term price looks like it's going to fall unless this price goes above the 180-day simple moving average. Then that can see a reversal or change of direction. On the but if you look at this, so the old resistances become new supports and vice versa. So the old channel pattern resistance, prices come back down to retest it. So this could potentially be a good place to go long, because it's sold off for so long that it's due a retracement. So I'd say this is a great position if you're going to the if you look at the MACD. So even look, the MACD and the RSI, they both look like they're approaching like a kind of a change of direction. They look like they're about to start changing direction as well. So what I'd say is that because this line is an important line, you could buy here, set a stop loss just below the resistance line, and see how far it goes up for. So you could go long on this position, and see if it will retrace, because it's been dropping for so long that it's due to at least have a little bit of upturn, even if it's still selling off in the long run. So you can make a little bit of profit, and then you'd have because the stop loss is just so tight, you might not really be risking too much. It could even find its way all the way back up to this line, but I'm not sure. I doubt it. But we'll see. The only problem is that you don't really know where your exit point is. You just have to play by ear and just exit it when maybe volume kind of dissipates. So if it starts climbing and then leveling out, maybe that'll be where you exit your position, or raise your stop loss really tight. But yeah, just because the old resistance is a new support, that's why I say this is a great place to enter and then set a tight stop loss. And viewers request, back to good old Tesla. Everyone loves Tesla. The gift that keeps on giving. Tesla. The Tesla. I think I should make a whole video just about short selling and bear raids, because I think that's what's really going on with Tesla right now. It's not even about technicals, it's all about fundamentals. I think there's so many people short selling Tesla that they are making a concisive effort to put out bad press on Tesla, whether it's true or not, the bad press, but they're making sure that there's bad news going around Tesla so that people can short it more, and then the shorters can actually win. So that's what the bear raid is about. I'm going to go into that in another video, but check out my other video on Tesla actually that I made about the financial education guy, Jeremy. But yeah, Tesla's been selling off. If you go on the daily chart, you can see that these lines are plotted. Tesla had this old support line, but it broke out of that, came out of that, consolidated against it, then sold off some more. It's at old resistance, which is $178. It's kind of flirted with it, but come back up. But if it breaks out of here, the next level of support would be $135. So there's potential. Once again, I'm going to set an alert here. I'm going to set an alert here, and if it breaks out of this, I'd say it'll be a great short position, because you could short it down to the next level of support. and if you do that, that's 4,000 pips or 24%. You can make 24% of 4,000 pips if it carries on selling off. And I think it probably will, just because there's so many people that are benefiting from the price of Tesla going down, because it's got so many short sellers in this market, so many high profile short sellers ready to make a profit of Tesla's, not demise, but valuation falling. So people are really plowing in on them. So I'm going to be watching this. I've set an alert. If it breaks this line, then it could be potentially a short down to $135. But that's my analysis right now. I wouldn't take a position or take any real action until it breaks out of this line. And last but not least, I'm looking at HBI. This is one I covered a while back, but I didn't really give it much attention after the fact. Someone pointed this out to me. It was in a descending channel pattern. Found a kind of like a support at 1597. 1597, yeah. Found the support there, and it kind of hit that, came up, retraced it, and now it looks like it's going to break out to the downside. 188 simple moving average is falling, so expect this is a good short. This is a prime setup for a short. It's respected this line, came up to the 15-day exponential moving average, couldn't break out of it, and then it sold off some more, and now it's broken this line. This is a prime position. This is a nice short. This is one I'll definitely short. Maybe I will actually short it. The play I'd make is that I'd short it down to this line. That's 500 pips, about something like 500 pips. But this one's a slow mover. That's the only thing. It moves really slowly. It took a month to go down 300 pips. Yeah, it's a slow mover, but at least this one is a high probability trade. It looks like it's going to sell off, and the stop loss could be pretty tight. You could set it pretty much just above this line, so you're not risking, the risk to reward is really great. You could be risking 100 to make 500, 5 to 1, real good. It's just that you have to be very patient with this one. It's going to be a slow burner. If you go on the weekly, even the weekly, look at the weekly chart. This is a 188 simple moving average is bending downwards. Price has been selling off for some time. Everything is telling me sell here. Everything on the weeklies, on the daily. Let me go to the 4 hour. Everything's telling me it's a sell right now. So yeah, this is probably out of all the ones I've shown you, this is probably my favorite one setup wise, because just everything's telling me the same thing. But yeah, that's Any aka the Noctrader signing out.